So let's go across to our first guest on the show. Abhishek is with us Chief Equity Advisor. Uh, and Abhishek is joining us now live. Abhishek, thanks so much for taking out time for us. What is your outlook for for CY22 now that CY21 has been a great year for bulls?
Hi. See, right now, I think the last month, 1 month, we've been in the midst of a consolidation. My sense is that we are going to continue to have this kind of consolidation till probably around budget time, and maybe the budget would be the next impetus to for the market, whether upwards or downwards. That needs to be seen. But broadly, I think the next month or so would be something on similar lines.
Right. How do you see the flows panning out? I know it's very difficult to call out for flows, but do you see after a correction, India being an attractive market for global players?
Absolutely. I mean, medium to long term, India is pretty much one of the strongest economies in the world. India is able to not only attract but also absorb a large amount of capital. That is also very important. You might have some smaller emerging economies, but they don't have the kind of breadth that we have in terms of stocks being listed, in terms of the quality of the companies that are on offer. So I think uh, flows will come back in. It's just a matter of time when the year end and slowly the pandemic sort of again making a peak, and a lot of these factors probably are contributing to a shorter term outflow. But I think medium to long term we should be fine.
In terms of sectors, what should one bet forward to? The traditional names like steel, cement, aluminium, they have also done well, or go into the new age listed companies where valuations are high but growth outlook is also pretty strong.
Yeah, my take would be to stick to companies where earnings growth visibility is strong. Uh, in the near term, I think near to medium term, so basically for the next year or so, real estate seems to be on a very strong wicket. So if you look at all the ancillaries to real estate, whether it's paints, whether it's sanitary ware, cement, pipes, uh, all those, including plywood and MDF and those kinds of places. So all of that looks pretty interesting as of now.
Right. So, what would be the ancillary for real estate? How would you look at it? Would you want, something like a plywood or an interior company, or you would look at a building material company? Because there are a lot of ancillaries or precursor to that real estate name.
Yeah, I think all of those will do well if real estate picks up, right? And within that space, if you look at if you want to sort of do fine analysis, uh, say plywoods or the lower ticket items, whether it's sanitary ware, whether it's you know tiles, those would probably do slightly better, because even if you're doing second hand home sales, so just changing hands, a lot of people would tend to change their toilet sanitary ware, or they would want to change their tiles. So even in those circumstances, you will see an upsurge in sales in those, compared to only with primary sales. So but I think the basket is fairly large for you to look at. In addition to real estate, obviously the other areas where there is going to be a lot of thrust is infrastructure, construction, engineering. So the traditional old economy plays, I think, would be a better bet going forward.
Right. When we just look at some of the metal names, they have earnings visibility, or cement names, but there is always that risk that pricing may come down. What will happen globally? How money will move. Do you think that one should focus on this direction despite 2021 being a great year for them?
See, cement and steel are different in a way that cement prices are determined, price, demand, supply are determined locally, right? You don't import a lot of cement, whereas steel prices depend a lot on what is happening in China, what is happening globally. So to that extent, I think cement is slightly safer bet in terms of being a lot more cyclical. I mean, a lot less cyclical than steel. So I would probably prefer cement over steel, because lot more needs to be tracked, understood, a lot more variables are there in cement.
Right, but one has to look at commodity play because inflation is probably the theme for 2022, and how can one play this? You have to play with companies that create inflation, right?
I agree with you, but in inflationary circumstances, it is not only the commodities that will do well. You should also be focusing on companies where they have pricing power. So any company which can pass on prices to you, and you are a price taker, you as in any consumer is a price taker, is actually a good business. It's just in the same theme. If you look at paints, what what has happened in the last few months is that prices of paints have gone up reasonably well, and demand has not really come down, which goes to show that no matter which company you look at, there is significant pricing power that they enjoy. So in inflationary times, I think instead of focusing on just commodities, it is better to look at companies which have pricing power, which can actually transfer that pricing onto the end consumer.
In terms of NBFC banks, how would you look at that sector? Because that is a sector which refuses to go up or refuses to outperform after probably a decade of outperformance. How would you look at that sector?
I think I personally am pretty bullish on financials. I think India has a very long runway of growth, and that cannot happen unless the financial sector does well. Now again, the challenge with financial sector, as you know, today from morning, if you seeing the news cycle with the RBL Bank, I think the challenge is that there is the banking sector is a leveraged play. So you have to be very sure about the bank or the NBFC that you are betting in. Probably you're better off betting on conservative companies, people who are not really just running after growth at any cost kind of management. So that is where I think the value is going to be. But definitely, I think banking NBFCs is a place to be for the next, 2, 3, 5 years, even longer.
Generally you tend to say that a mid cap company which will gain market share is probably giving you the best return. But in banking, higher the size, higher the better. I mean, the better the quality. I mean, the balance sheet
I
size does
mean,
matter.
this size, dilemma is not really true if you look at, the Indian markets. It's not that in any sector, if you look at, it's not that the smaller player does better than the larger player. It's the quality of the company beyond a certain scale. If you're looking at the business beyond a certain scale, I think it's execution, management, how they do, how they go about doing their business. In terms of banking, I think if you're going with the larger, it's not only larger, right? I mean, it's large. It has a larger balance sheet. It has more ability to absorb shocks. And the other thing is you have to be very sure about the management quality, because the challenge with any banking name is that it's very difficult as an outside investor to really assess what the book consists of, right? So you have to go with some bank or some management where there is pedigree, where you've seen performance for many years, sometimes many decades. I think that is very crucial.
Right. Just a word as far as pharma and IT is concerned. IT has done particularly well, but rupee is depreciating. It would benefit. How would you look at these two traditional defensive sort of names?
I think both I'm positive on both. Longer term, both should do extremely well. Even shorter term, I think both IT and pharma uh, are likely to do well. Again, the challenge is in pharma, you have to be stock specific, because every company does things slightly differently. Their markets are different. Their product segments are different. So you have to know the particular company. In terms of IT, IT services pretty much is, in my opinion, if you pick up the larger names, companies which have demonstrated performance, have a very large customer base, they will tend to continue to do well, because network effect is something in terms of acquisition of new customers. is something very important in IT.
Right, sir. Thank you so much, sir, for taking our time. For us, always good to get perspective from you. There was a detailed chat with Abhishek on which sectors, what to look forward to in 22. On that note, when we just look at the